The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. This is November the 6th. I should know that because in 2 days' time, 2 days' time, I will be doing my live all-day webinar. Woohoo! Am I excited? What a perfect time, historically, to be able to do this right now. Not only that, this morning on CNBC, what do I hear? Well, I saw it. I didn't actually hear too much. Harry McClough announces at 432 Park Avenue in Manhattan, he's building the tallest building in the Western Hemisphere. Is actually the tallest residential building in the Western Hemisphere. This is a guy that always builds at the top, always crashes, and then survives. He's called a survivor. And he, and he said, oh, no, this is a risk-free. There's very small debt. You tell me when you can build in Manhattan, the world's tallest building, risk-free. Now, as many of you know, I talked about this. Oh, I haven't got that big poster up. Forever. I wrote a paper back in 1987 for Barron's, 1986-87. Submitted to them. It was way too positive. It's right there on TFNN. The chapter eventually became part of a book called The Psychology of Investing, where I talk about skyscrapers as being man's time freeze, an icon to man's ego. Doesn't have to be man, it could be a woman. In Hong Kong, I believe the wealthiest person there is a woman, a real estate agent, a builder. So it is generically, we call it a man, or people's icon. And this is the first sign. This is the yellow light that says to me that within 6 months, we should be making a market top of some significance. When I say some significance, I'm not talking about a 20% decline. I'm talking about something more than that. We'll see. We're not there yet. This is like getting the train from Boston to New York. If it starts accelerating and it goes right through Hartford without stopping, you do your best to get off at least by the time you get to New Rochelle, you want to be hopping off that train because you don't want to be there when it gets through. I'm thinking of that movie. Who was it, that French movie where the train goes right through this incredibly beautiful station, the locomotive, with his kids, just really a very well, music was great, filming was great. I don't usually like movies, I'm very fussy. You want to be able to hop off somehow or other at New Rochelle. Where are we in this big mega bull market? Are we, say, at New Haven? Where are we? We're definitely in that the last quarter of the ride. This is the mega bull market from the 6,600 low, the Dow, back on March the 6th, 2009. Where I might add, for my subscribers, we went long that very morning, the Dow Diamonds. We held it for about 18 months for a really wonderful profit. Okay, so we've got a bunch of things going on here. Let me just run the numbers. I've got the E-minis as I always do. There's that U-shaped pattern. It's walking the 9-period moving average. It closed below 1754. There's a heads up to say, be a little careful, because if instead of going above 1773.25, and there was every opportunity today to do it, except for one sector, one index that's saying, if this sector is taking a dive, which it is, which we actually, in my opening call, we are short the actual sector ETF. We are also long the 200% short that very sector. We'll see how the day plays out. I'm not sure if I'm going to talk about it much more than that because this is really just the start of a move, and I think for my subscribers, I'd like it to get a little garner, a little traction before I mention it. So let's go through the numbers. The E-minis I've just given you. There's that rectangle formation, the larger rectangle within a rectangle, and you've got a lot of resistance, and it stopped at 1770. Couldn't get those 3.5 points higher yet to break out. This is going to be just a really interesting time, and I'm going to explain. I'll go through it. In fact, I know we've got a lot of callers on the line. I'm going to go to the callers. I'm going to run the numbers. I do not have, yes, I do. Right there, it just popped up. Wonderful. There it is. I've got that Bloomberg screen. Dow's up 71 at 50,690. The E-mini, the S&P. Now, this is interesting. The S&P cash, the future's up 5.25. The S&P cash is only up 252 at 1765. Having missed, I'll do this so that I've really done a lot of things. I do want to talk about my webinar. A lot of interest, a lot of people signing up. I want to go through it because this is a phenomenal time in which to be looking at sector rotation, which we've managed to identify what is weak, what is strong, what going forward has the potential to move higher. What do you want to stay away from? Remember, I talked about Tesla for a while. I said it's made a peak in my daily, weekly, and maybe the monthly chart. Just I didn't want to short it because there was just, I didn't want to have that kind of a risk of pop-ups because it goes overnight. I didn't want to be gapped out and then prove to be right for my subscribers. But I'll talk about that. Let's just do the numbers now. You've got the Dow, one by one. I'll do the charts. The Dow made a nominal new high today. That's exactly, I told my subscribers, and this is a little upsetting because we got stopped out of our short position of the Dow. Very tiny loss. I could have held it. I didn't want to, and I'll explain why. Because you see that yellow circled area? This is not a stalk leg formation. This is just, I wanted to grab it to show you. Oh, yes, peak D. I did ask you to remind me about HLF. Oh, we got a lot to do. Let me get on with it. You've got peak E in the Dow at 15,604 on the 23rd of July. It pulls back, then holds the 9-period moving average, and then pops up to a leg F on the 2nd of August at 15,658, and that's it. It pulled back, went to a Roman candle, Chapman wave Roman candle. I'll talk about these different candles in my webinar. Boy, I'm going to give you, you don't just have to know my peak A, B, C, D, and the trough A, B, C, D. That actually turns out to be a really important part, but it's almost incidental to the weight that I am giving to chart formations, the H pattern that goes to an M pattern, failure patterns, things like that, so that you can add the wave count as you get better and better at using them with the chart formations. Now look what's happened. The peak D at 15,721, round number high, on the 31st of October, pulled back, held the 9-period moving average, and what I said yesterday was sideways consolidation continues as key support at the 9 EMA at 15,571. Has been tested for the first time since mid-October. Look at that 9. I'm going to teach you about, I'm using moving, I'm going to talk a little slower. I'm going to use moving averages in my course, which is not on the CD other than very intensively discussed in the MACD and the slow stochastic. But all those moving averages that I've used for the last 6 years or so came after I finished the CD. And I love to test things out for a long time before I call it something to use. Now look at this. That 9-period moving average was just nicked yesterday. That is a hint to say we are starting to get closer to the period where that 9-period moving average will become resistance. It's not right there at this moment, but I wanted to say there was a chance to move up. So there are also a few other indicators which suggest the upside remains quite limited. The MACD's fast-moving average is slowly slipping but remains fairly good. You see that green line above the red line? Still acting well, but the histogram is slowly shrinking. That's the distance between, it's the differential between the what you see as the fast-moving average between the 26 and the 12-period moving averages. So let's now just go to our story, and we've got the S&P. I'll do this as well. Let me get rid of this here. The S&P, SPX.X, failed to make a new high. So the high of 1775.22, I just want to type that in, 1775.22, 1775.23, is that right? Yep, 75.23 will make a leg C to the upside. If it fails from here with a stochastic at 83% still good, and the fast-moving average of the MACD starting to cross negative, there'll be an alternate count with an E. I've got a D so far in the weekly chart. Now let's go to the Qs. The QQQ failed by just a hair. It went to 83. The high today is 83.40. I want you to see 83.50 to make that leg D. But in the meantime, I'm going to type this in to show you a technique that I'm going to introduce. Normally, I only do this when I get to level 2. But I feel confident that I'm going to be teaching it in such a way it will not confuse you. It'll just add to your understanding of how powerful double tops can be. So suffice to say that. And there's a doji candle from last week. If there's no new high, and this week suddenly the Qs drop below 82.30, that's going to say watch out, because that could be what I call a 2-bar reversal in the weekly chart. A spike up to the 83.68, 83.75 level here will in fact make that leg D, and we'll just deal with whatever we've got. So I'm getting closer and closer to some kind of a top, at least a top of consequence here, at least a top that could pull back quite sharply. I'm not in that 15-20% area of a pullback just yet. I'm just going step by step. Now let's go to the rest, and we've got gold is up $7 at 13.15, silver's up 16 at 20 at 180. You got high-grade copper down again at 324. I'm telling you, this is going to be something to watch real closely. Bonds are unched at 132.30. The dollar is down 23.30 seconds. These are all things I'd like to go through if I get a chance. But first of all, we're going to go to our first caller. We've got Sue in Bethesda, Maryland. Hi, Sue. How are you?
Good morning, Mr. Basil. Thank you so much for taking my call.
Always my pleasure.
Yeah, GMCR, Green
Yes.
Mountain.
Yes. Do you have a position at all?
Yes, I did have a position with 64.60. And now you keep coming down. What is the next stop? What do you suggest?
Okay, so you've had that position for a while, and you were waiting for it to try to bounce back towards the 66 area, right?
Yes.
Okay. I'm going to make a suggestion, and this suggestion this time, my suggestion is I'm going straight to the heart of the matter. I do not like Green Mountain Coffee Roasters, distributors, coffees, teas. I just do not like this action at all. It didn't even get. It went to 65.39. It couldn't even hit the 9-period exponential moving average. I'm going to just show this for 1 second here. I'm working on these charts right here that you can see in this blank thing. If you're looking at Tiger TV, I'm going to demonstrate the arch formation. I'm going to demonstrate how the left side is tested, what happens. And this is a great example. Sue, I want you to hold on for 1 second. I'm going to give you parameters, but my suggestion is that you're going to have to take something off. So give me 1 second, and I'll give you other parameters. Then we're back with Joe. I'm sorry, Joe, you were first, but I'll get right back to you as soon as we're done with Joe, and then we'll also get to Jennifer. We're right back straight after these messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and let's see. We've got the Dow up 94. S&P's up 4.51. Big discrepancy there. Dow's up 0.61%. S&P 500 is only up to 0.26. Got to watch this real closely. So now we're going right back. We're going to go back to Sue Bethesda. Now, Sue, this is what I'm going to recommend. There is a chance. There's a pattern that now, I don't know if you can see Tiger TV, but if you can, what I'm showing is that there's a pattern in my CD introducing the Chapman Wave methodology, which I'll be talking about in great detail on Friday, because we are going to see this kind of pattern coming up over the next couple of weeks in many of the stocks. And it's a pattern that goes down sharply, makes a little kind of an arch formation, takes out the left side low and goes even lower until eventually it makes a bigger one, a bigger arch. Maybe it takes that one out, and then what happens is you'll end up with this M pattern. So all I can say to you is your best hope is for GMCR, Green Mountain Coffee Roasters, to hold the 60.15 area. Don't break and close underneath it, and then by Tuesday, even say Friday, but by Tuesday of next week, it has to be bouncing above 62.90, maybe 63.50. Then I'll say, phew, you've got a little time to think about it. Now the next rally has a chance to maybe get to the 66 or 65 level. But I'm also going to say to you, you don't have to do it this very second. Please think about it. Okay. I would take at least something off the table right now. I don't like this. The monthly looks terrible. The weekly looks very poor. I I'm very nervous about the stock. Something's going to happen with this stock, and it's going to gap down. It's going to gap down overnight. It's going to be really tough. My recommendation, you could always make up 7%, 8%, even 10%. But if this thing drops to the 58 area, I don't think it's going to get back for a while to retest where we are right now. So I'd just be very careful. As I say, you don't have to do it right this moment. Think about it. Say, what am I prepared to do? Am I prepared to take off a half? Am I prepared to take off 2/3? Am I just prepared to get the whole thing off and say, hey, I want to sleep at night. I can always make up a single-digit percentage. It's very hard to start making up a strong triple-digit, a double-digit percentage. So what do you think about that? I don't like the chart pattern at all. So I'm very nervous about GMCR. I'd be looking to short it. I wish it would get to the 66, 67 level, but I don't like it. So please think about how much you want to take off, and then put a stop on the rest of the position. Okay?
Okay, thank you so much.
As I say, it could bounce, but let half the position bounce, but don't let the whole thing go down. So put in some kind of a stop, think it through, and just be very diligent about saying it didn't get back to the level I wanted. I've got to protect my capital. You can always reinvest. You're good at it. You'll make it up. Just be careful, okay?
Thank you so much, Mr. Resto. Thank you so much. Okay.
My pleasure. Thank you very much for calling, and good luck. Let me know next week how it worked out. We'll go to Joe in Fort Myers. Hi, Joe. Sorry for having you wait.
That's okay, Basil. God save the Queen. I just threw that in there for my question.
Okay.
Yeah, do you see, I hope you're English, or I'm going to look silly, or sound silly.
I'm originally from South Africa. That's the British Commonwealth at one time, so we've got a little bit of an accent.
Okay, well, it was appropriate. Close enough.
Yeah.
Hey, Basil, do you see any time in the future to be buying gold?
The pattern that I was just discussing a few minutes ago, that pattern that goes from an H, a lowercase h, maybe to an M pattern, is unfolding in gold right now. That's the pattern that I just described a moment ago. It's right there. My suspicion is that there are trades in gold, and if you don't treat them as trades, and if you don't go in, take your profits, wait for the next pullback, go in, take your profits, wait for the next pullback, anticipating that at some point the dollar will strengthen and that gold will start to move. The monthly chart, I always show this monthly chart of gold. It really doesn't look very good. This is the gold, which hit 1182.60 right on the 200-period moving average, in the monthly, bounced, stopped dead at the 9-period moving average, and now it's pulling back. There's a long-legged doji candle from last week. If it breaks above 1361, let me go to the actual contract because we're talking apples to apples then. So I'm at the GC, the GC contract. At least for now, I'm using December. I'll go to January maybe in a couple of days. I'm going to say to you that selective stocks could have a bounce, but you know what? I'd like to be a little bit more thorough in my answer to you because I want to show you exactly the parameters that I'm looking at based on the Chapman wave. So why don't you hold on, and I'll talk about, I don't know if you have, do you have any position now?
Negative, no.
Nothing. Okay, that's great. So let's talk about it as soon as you get back.
Thank you.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman. This is the Tiger Technicians Hour. Dow's up 93, S&P's up 4.5, and we're on right now with Joe in Fort Myers. We're talking about gold now. In the technique that I use, I like to go for a buy signal that goes to a buy mode, and when it gets to peak D, as the GLD did when it went from 121.85 in October to the most recent high of 131.45 on the 28th of October, the steepness of the decline after that tells me whether or not it was a sponsored event. What I mean by that is whether it became attractive for other reasons, emotional reasons, and that seems to be the case. 110 points on the GLD in a quick move. So what I've done is, for my subscribers in my opening call, we grabbed a gold stock that I like, a mineral stock that I like, that we've had some success before. The last time, we got it a day, I think it was either yesterday, I think it was yesterday or the day before, and we got it, and all I wanted out of this thing was a certain percentage. It's up about 3%. It could, any minute now, it could pull back a little bit, but I've raised the stop, and the stop raise level was hit this morning, which means that we've now got a break-even trade. And now I'm saying now you show me, Mr. Stock or Ms. Stock, what are you going to do? That's the only way I think you can play gold at this particular point, and I'll explain why. In the pattern that I call the H, which I drew in ages ago, it's right there in my weekly chart of the GLD. It ran up, it went to the 200-period moving average, and then it pulled back. And now it seems to want to trade lower than the 9-period moving average, even though the MACD is quite good, and the stochastic's holding at 38%, which is not great. So I would say to you, as far as gold goes, it's a very difficult thing, and the very thing that you've got to watch for is, I don't know if you do the relationship of gold and the dollar, but the dollar just got repelled at the thing I call the inside track reversal zone. And if in the next 2 days the dollar is able to break above 80.93 and close at 90.10, 81.10, whoops, then all of a sudden the 81.26 200-period exponential moving average will come and attract for that and help the weekly chart, which is trying to turn, and that's going to put pressure on gold. So I'm going to answer your question real succinctly. If gold pulls back, this is the December contract, and breaks underneath the low of yesterday of 1305.20, closes underneath it, I'd say don't do anything. If gold in the next 2 days is able to get to 1325, I'd say that's not bad action if the dollar is pulling back quite sharply. And then what I would do is I would go for I'd actually like to choose one of the better gold stocks and just go for a trade. I'm thinking only trades at this particular point. There is a chance that in the H that goes to an M pattern, if gold, the gold contract at any point goes above 1361.80, that will be very positive in the sense that it's going towards the upper part of the arch and the resistance area. So it's really difficult for me to say. I would say to you only this. If you were to trade gold and you bought it right here at 1316, it's real easy for me. 1305 would be my stop. Now, that's a big, I would not have that kind of a move in percentage terms on the contract. I would much rather just hold off a little bit and say, I'd rather start to see it in the shorter term, like the 120-minute chart, break out so that it's making higher highs and higher lows. I'm going to say one thing right now. I would just hold off on gold. I just don't see a big move. And actually, I don't quite see a big move up or down right at this very moment for the next day or two. So it's a long way of answering it, but my succinct way of saying is hold off for now. Give it a day or two. Let's see if it can settle with some base, or if it's going to break the base, or let's see if it can turn the 1322 9-period moving average into support. Hope that helps you, Joe.
That's a lot of information. I'm going to lie down and take a nap.
Okay. Well, that's exactly what you should do then. Take a nap, because I wouldn't do anything right at this moment. Thanks for calling, Joe. Let's go to Jennifer in Wellesley, Mass. Hi, Jennifer, my neighbor. How are you?
Good. Thanks for taking my call, Basil.
My pleasure.
I own Netflix. I got it at the high, and I'd like to know your thoughts on if it's going to climb back to its high or if it's going to fill that gap at 180 before it goes up, and if it's and exactly when I should get out if it's not going to go higher.
Okay. Now, let me just ask you. So you bought it in the 380s?
Yes.
That makes it really tough for me, and I'll explain why.
Okay.
My monthly chart is in leg D, and almost certainly if Netflix is not able in the next week or two to get above 356, it's trading, NFLX is trading at 335 right now. If it's not able to get another 12 points to the upside, and it's had every opportunity to do it, that's going to be tough, because I've got a feeling it's going to make a peak D. Looking out, there's a beautiful rectangle formation that's forming in the monthly chart, which says, now I shouldn't have said beautiful because it's not what you really want to hear. I'm just talking about chart patterns. I'm not talking about the stock. So if Netflix starts to break underneath 3, the low of this week was 325.15. If it takes it out, the 317 area is going to be really important, but most important will be the low of 2 weeks ago, which is 309.20. I know you don't want to hear that. I just have to tell you, I think that all the sexy talk about Netflix, all of the fact that it's a leader and there's no one else in its class, I think that absolutely applies. But the candle of the 26th of October, that is one ugly candle. It opens at 389.16. No, it opens at 387.84, goes to 389.16, and then it drops all the way down to 321, 60 points, 68 points in one session at what should have been really good news, and it hasn't been able to get back into even the middle of that candle. So
I think that was Carl Icahn's doing.
Yeah, and you know what? And he still has a position in it, but my suspicion is that once he's getting out, I don't think he stays around all that long. This is my guess. Now, here's my thinking. I want you to recoup as much as you can. If this is a longer-term position, Netflix should, in fact, maybe drop to the 317. It could even drop to test the 300 area. The best-case scenario is that the worst is over, and it's just a very slow rectangle formation. That's really what I was talking about, the monthly chart, but it starts in the weekly. So let me explain what I'm looking at here. Because it's managed every day since the low of the 29th of October, 309.20, it's managed to climb above the 9-period moving average, 9-period moving average at 331.21 right now. Is that 21? Yes. That's the last 4 days. Once it broke above it, it's held it. There's a chance you can get what I call an inside buy signal to buy mode. And that says, within the daily chart, usually I go to the lower time frame, which is the 120-minute chart, and that's already gone to leg D today, probably a peak D. So, wow, this is really tough for me. Normally I would, this is a big drop, 50 points. It's like 13-14% that you're down on your position. And if you were looking at this as a longer term buy and hold, you didn't expect within hours that it would take that kind of a drop.
Yeah.
So psychologically it hurts, because even if it's climbing on its way back, even if it was right now at 360, that's still 20 points below. There's a lot of work to be done to the upside. Here's my thinking, if you don't mind. I'm going to make the suggestion that says at least 1/3 of whatever you have should have a very tight stop. And that stop, I'm going to make, you can choose the number, but my number would be 331 to 330, somewhere around there. I would just say it's at 334.41. If it takes that out, I have to take some of that off, because that money can be put to better use. In other words, if you find a stock for that particular amount of money that has all the right credentials, you could make up part of the position.
Yeah.
Now, you've got to just forget about making up the whole position at this particular point. Why? Because you have to go step by step. The next thing is, if this manages to hold nicely and by Friday afternoon, Monday, it is even close to 347. It sounds like quite far away, but for this stock, it shouldn't be. 347 to even 351. Raise your stop on another 1/3 of your position to about 5 or 6 points below that. And then I'll be saying, keep your core position. Keep your core position, because over a period of time, you could put back some of that money and then average down. But there has to be a plan. So I'm going to do this. I'm going to say to you, Jennifer, that's my strategy for now. I would like you to call me. I won't be here Friday because I'm doing my all-day webinar. Call me on Monday. Let's look at it together and see what's going on. And somehow or other, we'll try to work our way through this. Probably going to have to take a loss, because I'm looking at least 3 months, maybe even more, before Netflix digests all these huge gains, and then starts another big move to the upside. Maybe 6 weeks to 8 weeks. I'm not sure. So that's my thinking.
Okay.
I would rather not you have that capital loss if it suddenly takes out 320 or 317. I mean, then you're really, and it aggravates you. It just sits there bugging you all the time. Even if it's not money you're going to use, it's money you could be using. Do you know what I'm saying?
Yeah, I do.
So I know it's not good news, but we can turn it into better news than bad news. So I'll try to work with you on this. Let's talk again maybe Monday, and that's my plan for now. So I hope that helps you, Jennifer.
Yes.
And you can send me an email if you want at basilchapman@tfnn.com, and maybe I'll show you some of the charts that I'm looking at as well.
Okay.
So thank you for calling. I appreciate it.
Okay, thank you,
So
Basil.
let's go to John. Thank you very much. Let's go to John in Rochester. Hi, John. How are you doing?
Good, Basil. Thank you for taking my call.
My pleasure.
Okay. I've owned U.S. Steel for a couple of years. As it was coming down, I would be scaling into it, and all along I would be selling the calls on it. And
okay.
So what has happened? What is going to happen is a couple of months ago I sold the 24 November calls, and now I'm going to be called away. And I just, so I was thinking, well, I'm just going to throw this at Basil. What would you do if you were me? I think when I sold the calls, they were like 24 cents or 30 cents, and I didn't expect to be called away, but the stock is taking quite a jump. And should I just get called away and then wait for it to pull back?
How many shares would you own?
3,000.
3,000 at this level. That's, it's been one of my picks for my subscribers, and we've done extremely well because we were able to get it at 21.82, and today it hit 27.66. So that's a completely different. Okay, so that's
my dollar cost average in it is probably 22.
Okay.
I'm not selling at a loss, but.
Okay,
I always get my calls above, try to keep them above where I would, when I got called away, I wouldn't be.
Right. So this is a little unusual for you because you've been in the right position for a long time. Okay, here's my thinking. It's a little complex for me to discuss it here because I have to talk about the stock rather than the calls themselves. I think that U.S. Steel is doing fabulously, but it could pull back to the 25.60 to 25 area, and it could then do that quite soon. My biggest problem is in leg D right now, and it says it's fabulous action, but it needs a little bit of a breather. But I'm looking at U.S. Steel, and I think it's going to be going towards the 28.5 to 29.5, maybe even the 30 area over the period of the number of weeks. So do you have a choice right now, or is this pretty much it that you're going to land up with a stock?
Here was one of my thoughts. What if I bought the calls back and sold them, maybe the 27's way out?
I think I would do that. It won't, you know what? I think I'll do that. Give yourself about 3-4 days, and then if you actually want to own the stock in the 25, 26 area, then it's easier for you, right?
Yeah.
So
you mean probably wait till next week and then make that decision whether to buy
I'd wait for next week.
Yeah.
So that's my thinking.
Yeah, to pull back to 25, buy the calls back, and then sell them out further.
That's my thinking. Okay. So let's keep that one in mind. Today's Wednesday. I'll be here tomorrow. I won't be here Friday, but we can talk about it Monday. But that's my thinking. Hope that helps you. Thank you very much, John. We'll be back with Dan Baskin-Ridge straight off this.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online Master Trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online Master Trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. We're going to go straight to Dan at Baskin Ridge. Hi, Dan. How are you?
I'm doing well, thank you. Basil, I'd gotten stopped out of BIS this morning, and I was just looking to see where might be a good entry point to get back in on the short side. Today is
20, but the low was 25, 22. Let me just see.
I had a stop in from yesterday, put in at 25.15, and somehow the quote came in at 25.08 and triggered the stop.
What a pity, because
yeah,
that was based on mine, because today I had the stop at 24.90.
Right. I missed it.
Okay, and now it's trading. So folks, in my newsletter, my opening call, we've had a number of trades. We just started getting back into the short side because I think that this is appropriate at this particular time. sector that I've been looking at is the IBB NASDAQ Biotech ETF, which we are short at 107, I believe it's 207.21. Yep, 207.21, and today dropped down to 200.98, trading right now at 202.74. The pattern that I'm looking at is that H pattern in the weekly chart, and the 120 chart gave me a peak F top and has gone left side, right side. It took out the right side in a shorter time period, so it's going to be really important if in the next 2 days, my thinking was, and I said this before when I typed up my notes, that if the IBB takes out 203, it could be a real quick run to the 200 to 199 level. So it went to the 201 to the 199 level. And that's really my stance right now. So I'm going to make the suggestion, because if I'm correct, and this is always a big if, I think this is leg B up in the BIS, which is 200% short the IBB. And I'm going to recommend that even though it's at a higher price, say you are protecting your position with a stop, and now it is way higher, and I'm going to suggest it's actually a point higher than where you got in, and I'm going to suggest another attempt at this. But now you have to do something different. If you are in a number of positions, I'm going to make it a smaller position now because it's a point higher, and that's all you have to do. You don't have to think, oh my goodness, now I've missed the opportunity to get in. All that happens is that the amount of money that you were going to put in is lessened by a little bit. I'd even say you can lessen it by 1/3 the amount you were going to put in. Why? Because you've now got a $1 higher entry point. But I'm really looking at this, and I think that for the first time, the weekly chart is suggesting that the biotech sector, I don't know whether it's going to be the healthcare, I don't know what it is. This is the first time that I'm saying I'm seeing signs that this time it could be far more serious for the IBB to come down. So, Dan, that's my recommendation. A smaller position, even though you could be buying at the high of this particular move, if you want to stay in the sector, and I think that the signs are that it's going to come down, start nibble at a position right now, and I will, in my newsletter, I'll accommodate something like this and say what I'm thinking, and it'll help you a lot.
Very good. Thank you.
Okay, thank you very much for calling, and thank you for subscribing. Folks, let me just tell you about this. There's a special going on right now. You've got the Tiger Dollars. If you want to use your Tiger Dollars, if you want to get my course, not only will you be able to pay for the course if you spend $500, you'll be able to pay for the course by getting a discount. You'll also save $95, and you'll get about $25 in your Tiger account to use for something else later on. Please consider it. I'm telling you now, as far as my work is concerned, we're at an inflection point in many, many of the indices. Not only that, whenever I have more than 6 or 7 long positions on, that's where I get real nervous. It says to me, whoa, every time that's just some kind of a top is coming up. So this is a very important, I'll be going through the sectors, I'm showing the chart pattern. This is such an educational moment that I find it's incumbent upon me to stress how important it is. Go to the
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.